On local economic news this week, we saw market interest rates falling further during the week, particularly with the average weighted prime lending rate falling by 32 basis points to 13.68%. And if you look at the rates, these rates have been continuously coming down, and it's getting closer to the target rate which was anticipated by the central bank for the December quarter. On the treasury bill auctions which concluded today, we saw the 3-month treasury bill rates fall further by 20 basis points to 16.1%, while the 1-year treasury bill rates remain constant at 13%. Also, on an interesting front, we saw foreign holding of treasury bills and treasury bonds increase by about 6.1% during last week, which was an encouraging sign for Sri Lanka to see foreign inflows to the government securities market. However, from a treasury bond perspective, we've seen the long-term treasury bond yields slightly edging up during the week, roughly by 50 basis points on the long tenor, particularly on the 5 to 10-year bond yields. On the inflation front, we feel that the slowdown that was witnessed in terms of inflation over the last couple of months might take a pause, particularly with the increase in terms of electricity tariffs by 18% during the month, and also with global commodity prices increasing, we might see the inflation reduction kind of slowing down going into the December quarter. On a positive note, Sri Lanka received staff level agreement for its IMF second tranche for $330 million. However, IMF highlighted a few corrective measures that Sri Lanka may have to take before they receive board level agreement, which is at the point at which Sri Lanka will receive the $330 million. The key reforms may trend towards increasing government revenue as the government falls short of its target by about 400 to 500 billion in terms of revenue, and the IMF expects Sri Lanka to increase its government revenue to 12% of GDP from roughly about 10% of GDP in the year 2023, which means that Sri Lanka may have to increase its tax revenue by roughly about 700 to 800 billion during 2024. It will be interesting to see what the government of Sri Lanka does to increase its tax revenues given the shortage of about 700 billion, and with tax rates already being high, we feel that the priority may be towards increasing the tax base, where the budget focuses more on methods to increase tax collections rather than increasing the tax rates as such.